Hi, welcome to T Minus Retirement, the podcast where we help launch your retirement into orbit. I'm Jay Cole,
And I'm Dustin Watts.
and in today's video, we're going to be talking about some recent legislation that's trying to get passed, and that's essentially allowing 401k companies to invest in essentially private companies or just private funds.
Yeah,
So
private markets.
private markets, yeah. So these tend to be funds that it tends to be hard to get into in general, and we'll see how this plays out. But we just wanted to talk about the ramifications of doing so, and just seeing, just discussing to see if that's really a good move or not.
Yeah, there's been a lot of buzz around the executive order that Trump signed because there's a lot of articles and things that come out that's, executive order signed by Trump is going to affect your 401k. I've had clients ask me about it and how that will impact them. And again, at a high level, private equity is what they're going to allow 401ks to invest in. And when you invest into private equity, you're essentially investing into a fund where they go out, the fund managers go out and they invest in private businesses that you normally wouldn't get access to. They're not traded on the New York Stock Exchange or something. And there's some pros and cons to that. I have quite a bit of thoughts on whether people should do that or not, but it's really created a lot of buzz, both positive and negative. So maybe we'll dive into maybe some positives that we could see from it. So first and foremost, my opinion on investments in your 401k is like I am totally good with okay with whatever someone wants to invest in. I think that is completely your choice. If you want to invest in something, private markets, you can make the argument that it adds diversification because you're getting exposure to companies that you really never would have been able to, and allowing you to do it through your 401k, really gets a systematic contribution in investments into these types of funds. And honestly, most people can't just go and invest in private equity. I probably should have mentioned that too.
It's very hard, yeah. And even people or institutions that have a lot of money, it can still be hard for them to get into it as well.
Yeah, so you get access to these managers like Blackstone or Apollo or what have you, and then they go out and they make all these investments into these private companies. And really, I would say there's two things that these funds are sold on, and they're sold on diversification outside of regular markets, public markets, like I mentioned, but also I see a lot of times they're sold on lower volatility. And I have a lot of thoughts on that too, but that's really what I would say they're sold on and what they're marketing as far as like, hey, in your 401k, you can get access to these markets that you normally wouldn't be able to, and it's really for the rich. That's kind of how they make it sound.
Yeah, well, it's funny. We went to this investment conference last year in 2024, and the
Yeah.
big talk was private equity. That's what all these firms were starting to come out with, funds that would invest in that. They were trying to make it more accessible just to the everyday advisor or investor. And I don't know, it kind of just seems like it's the trend that everyone's trying to chase, and now even the government's trying to get on board with that. So it is interesting to see that. I think too, like you said, it's a little bit of a misnomer where it could be less risky than other investments. And I think
100%.
I think the big part of that is that it's not valued on a day-to-day basis, just like how other stocks are. The market opens and then it closes, and whatever the stock did, you get that price at the end of each trading day. Whereas private equity, that's valued more so. I mean, would you say it's more so like on a yearly basis or a monthly, or?
I'm sure it depends on the fund, but yeah, it's probably going to really depend more like monthly, quarterly type of valuations.
Yeah.
So, you really don't know. And that's why it looks on paper like it's lower volatility because you don't have the change in price minute by minute when the market's open.
Right.
But, don't be naive. It's like if you're investing into a private company, which think about this, it's those companies are probably going to be quite a bit more risky than something that's in the S&P 500 that is well established, has a great management team that has been around a long time. If you're a private company getting money from private equity, uh, those are I'm sure there's a lot of great businesses, that fall into that category, but they're not S&P 500 quality. So they're definitely going to be riskier.
Hmm.
But it makes it look like it's lower volatility because you don't get the price every day, like you
Yeah.
mentioned. So, I kind of see three cons to it. Private equity is when you look at the landscape of investments, private equity is going to be one of the highest fee type of investments
Hmm.
out there. I mean, you're talking probably minimum 2+% when you can go and get, an S&P 500 fund for 0.03%.
Yeah.
So there's got to be a lot of outperformance from the private equity. That's one thing that they claim too, is that there's going to be all this outperformance. I mean, I guess time will tell on that. I am skeptical of that because you have a lot of companies in that private equity bucket that will probably, go to zero. And you'll have a couple that do very well. Um, I guess depending on what the fund is really focused on, whether that's startups or maybe more mature businesses. But so high fees is something that is definitely to be aware of. The second thing is, and I think this is where people are gonna really maybe get into a little bit of trouble or be surprised by if they don't fully understand what they're getting into. You you can't just get out of private equity whenever you want, as far as make a
Yeah.
liquidation. They have liquidation periods where they allow you to get out. So that's one of the things in a private market. There is no open market for you to sell your shares or your position, and that is in the details of these private equity funds. Is there are liquidation periods, and there's a lot of stipulations on not only when but how you can get liquidity.
Yeah.
So that could be a negative. If I think one reason why they're putting it in the 401k is because theoretically, hopefully you're not touching that money for a long time. So, I guess that's as good a vehicle as any to have private equity in. But if you do need liquidity, or you retire and you go to roll over an account or something, I'm not exactly sure how all that is going to work. Whether you're
Yeah.
going to be able to get instant liquidity when you need it, in situations like that.
Hmm.
And then, yeah, really the last biggest con that I think is I believe it's a misnomer that they're saying it's lower volatility for the reasons that we mentioned. It's just not priced every day, so you don't see the ups and downs. But make no mistake, if the S&P 500 goes down by 10% because of an event going on in the world, I guarantee you those private companies are experiencing the same type of struggles. It's just that you don't see it reflected in the share price,
Yeah.
immediately.
Yeah.
So
Well, especially too, if we ever are in some type of market recession, or even a recession across the whole economy, that most likely these small companies are going to be doing a lot worse than, like you said, these bigger S&P 500 type companies.
yeah. So really my view of it is I'm definitely open to having it in 401ks. I don't, like I said, I don't care what people want to invest in if they really want to invest in something like that. I think you really need to be aware of how it works and the pros and cons. But I'm a little skeptical because I feel like you said, Jay, it was a big trend in the financial world, financial advisors and all these types of things, 401ks, of getting private equity into it. And when you see those types of trends in an industry like that, I like private equity. I feel like it's private equity seeing a whole new market to get, large fees on. And of course, fees will come down over time, just by nature of having more exposure. How long that takes, nobody knows, and where that ultimately lands, nobody knows. But I see it as they see this huge potential to get more assets into their funds, charge these management fees. I'm very skeptical, but that they're going to be outperforming consistently the S&P 500 or some type of index like that.
Yeah.
Um, so I just don't I don't know that the average person really needs that exposure to do well in their 401k. I think to do well in your 401k, it's a lot more about just being consistent on your investments and doing that for a long period of time rather than I held the S&P 500 versus I held a 5% position in some private equity fund. So I'm definitely leery there. And then also being a little skeptical. Uh, I almost feel like too, there's some aspect that the private equity feels like all these new assets, whether it be in 401ks or even like our business, like RIAs, it's almost like a liquidity opportunity for them to get all this new liquidity into their fund and have the people who are already in their fund have options to get out.
Yeah.
So that's I might be a little, skeptic on that, but ultimately, I think you can do very well in a 401k without having that in your portfolio and not having all the strings attached. But again, I believe that if that's something that the individual investor wants to invest in, that's their prerogative. But you definitely have to know the pros and cons.
Yeah, and if you want to at least get some type of action from that, 5%'s not bad. You just have a little sliver of your portfolio into that, so at least you're getting some of that exposure without risking your overall, you know, entire 401k.
Yeah, I don't know if there's going to be limits. That's a good point. Will these 401k providers say, hey, you can only put 10% max into these types of funds? Or I don't know if there's going to be limits or not,
Yeah.
or if there's going to be some type of disclaimer or education that you kind of need to basic level of knowing what you're getting into when you get into a private fund. But at least maybe a pop-up saying, hey, here's the risks of at a minimum would be helpful for some people to at least
Yeah,
understand.
exactly. Yeah.
We'll see how it evolves, but yeah, we just wanted to bring you a brief overview of this because it's getting a lot of attention. Like I said, a lot of people are asking about it, and it's something to definitely know the ins and outs before you get involved. So we
Hmm.
hope that you found this video helpful. If you did, please like and subscribe. We look forward to seeing you in the next video.